So, after spending a week in Miami with a bunch of seven-figure funded traders, here are the 5 things that I think are going to really help a bunch of people to get funded and how to scale their funded journey. So, number one of the things that we talked about in depth is people buying too big of an account size. You see it all the time. I've done it, some of my other friends and influencers have done it. We buy an account size too big to start off, and we don't know how to manage that risk because the numbers are so much higher. So for example, when I first started out, I was very comfortable trading the 50K accounts. However, the moment I tried to jump to a 200K account, I would see a lot of psychological distress. I couldn't trade properly. I couldn't handle that trade size. So I kind of had to taper it back, take it down to the 50K accounts until I got comfortable trading the 100K accounts, until I got comfortable trading the 200K accounts. At the end of the day, it's going to come down to the trader having the understanding, hey, I'm comfortable trading this size. Let me go ahead and pick the account. I can go ahead and trade without having all these psychological issues. Now, here's a little bit of a cheat code when it comes to trading bigger size that I utilize to this day. Many people have talked about it with using trade copiers. Let's just say you're someone who's very comfortable trading a $50,000 account. However, you want to kind of scale up your trading and you want to maybe take a 200K account. The best way to utilize it is trade the 50K account, use a trade copier. So the trade copier takes the same trades, but 4 times the size on the 200K. That way, you're able to kind of trade the 50K normally, and if you hit the profit target, you'll hit the profit target on the 200K as well because it's copying the trades. You don't have to see the bigger numbers, you don't have to adjust to the bigger numbers, and it's going to be a great way for people to kind of scale up their account without having to go through that psychological journey of getting used to bigger size. Now, number 2, take your time. Being a prop firm owner now and kind of seeing the statistics and the amount of blown accounts that people have is very interesting to see. We have unlimited trading days, and yet so many people are blowing their accounts within the first week. Why is that? Because people are simply just rushing the process. They're not taking their time. They're just trying to rush to get funded. Everyone's on social media to kind of boast about their certificate, boast about their payouts. Remember, guys, your journey is going to be different from everyone else. So just take your time on the challenges. Go with a firm that has unlimited trading days. That way you can actually take your time. If you have a proven system, who cares if you get funded 2 months from now? You'll have that account and you'll be able to take out profits from it consistently if you are consistent with the results, and the whole time the journey will be worth it. Imagine you 3 months from today, you kind of stuck with it, you stuck with the funded account, and if you were funded today, wouldn't you be happy about it? Probably yes, but the problem is people are so focused on the now, they completely forget about the future and their future self. So do yourself a favor, take your time on the challenges, especially if you're someone who can't afford to necessarily lose the fee for the account. Now, tip number 3. If you want to scale up your trading, you're ultimately going to have to purchase more funded challenges. Now, the thing with this is this, you want to do it strategically. You want to essentially, first of all, get one funded account, make sure you withdraw some profits. From those profits, you want to start to maybe purchase some more accounts. And again, only do this when you're kind of in the right headspace to take a challenge. It's not fun taking a challenge, right? Everyone's been through it. It's kind of like daunting. So make sure you're purchasing these challenge accounts when you're in the right headspace. Now, once you're purchasing more of these accounts, you're able to kind of slowly build up the equity as you pass more funded challenges, as you build up your accounts. That's kind of the best approach to have because you can utilize it as a business expense. You're not worried about coming out of pocket for these challenges. You're utilizing, whether it's a personal account, whether it's a funded account, you're leveraging these accounts in order to purchase new ones. So again, you're not coming out of pocket, and then you can write it off as a business expense as well. So that is one really good way for people to scale up to that 7-figure, even 6-figure range when it comes to funding. Number 4, make sure your risk management's on point. Once you get funded, there's this statistic that a decent amount of people never even reach the first payout, even though they've already accomplished the challenge phase. And it's very interesting because so many people rush to kind of, all right, now I'm funded, let me go ahead and balls to the wall. However, I spoke with one of my good friends, Kyle. You guys know him as JadeCap. And again, he has multiple 7 figures in funding. And the number 1 advice that he gave was risking 0.25% typically on the challenge account and slowly building up the equity, right? Again, 0.25% on a 2 million plus account, that pays dividends over time. Yeah, sure, he might risk a little bit as he has a bigger buffer, right? Especially on A quality setups. But to build up the account, he's risking a lot less. So make sure your trade management and your risk management is on point. because that's ultimately going to help you retain these accounts. Because what's the point of getting funded if you blow the account the next week or the next 2 weeks? In order to build up the equity, you need to hold on to these accounts for a long span of time so that when you do pass more funding challenges, the equity grow. Now, number 5, make sure you actually have a trading plan and strategy that you're comfortable executing. And I know it sounds common sense, but guys, you'd be surprised on how many people think they're just gonna kind of go balls to the wall. This is their lottery ticket to get paid, and they don't even treat it like a real profession. Then it becomes a lot more like gambling. That's why you kind of have to be very careful when you're taking these challenges and all this stuff, because if you're not even a profitable trader on your own personal accounts, or at the very least a demo account for a set amount of time, how do you expect to get funded, and how do you expect to kind of maintain the accounts even when you get funded? Sure, there's people that can get lucky passing phase 1 and phase 2 of a challenge by over leveraging. But again, if your goal is longevity and sustainability, you need to have a proper trading plan. So make sure if you're going to take a profitable challenge, you have, your whole setup from when you're going to exit, when you're going to enter, how you're going to manage the trade when you're in it, what is your criteria to even enter a trade, what is your trading setup. All that must be kind of written down. It should be something that is kind of like the gospel for your trading business. Now, again, guys, these 5 tips, they're not in any of importance of order, right? These are just kind of 5 overall tips that I think people should have. And again, just talking with a bunch of 7-figure funded traders, this is kind of like the common insights that we've all had when it comes to growing your capital. So again, if you guys enjoyed this video, please like, comment, and subscribe. Also, if you have any additional thoughts that you want to add on to this, make sure to leave them in the comment section, and I'll be kind of going through that. And until next time, I'll see you guys in the next video.